Good afternoon, my good students. I hope you guys you're all well. Today I want us to look at business data analytics. And the question that allowed us to handle, of course, is a question which was attested in August 2025. That is our last sitting paper. This is business data analytics. And the concept, of course, is about financial management. So even if at all you're also not doing BDA, but you have any content or any paper for FM, this one will also be very ideal. I do train business data analytics at MDRAS Digital College, and currently our classes are ongoing, which if at all you're doing a paper or maybe you're doing BDA or financial modeling and data analytics that is in regard to CIFA, you can as well join us for the classes. So our focus today, it will take like 15 minutes of our time. We want to handle this question, which was attested back in August 2025, and the question is question number 2. So what are we told? You're told that you are the financial analyst at Kiboko Manufacturing Company that is considering investing in a new production line. The project details are as follows. We're given initial investment, a project lifespan, we have cost of capital. The expected cash flows for the production line are as follows. So these are the expected cash flows for the production line. Additional information, we're told 50% of the initial investment will be financed through a 5-year loan at an interest rate of 10% per annum. Loan repayment will be made in equal annual installments at the end of each year. Okay, the applicable tax rate, we're given 30%. We're told the production line will be depreciated on a straight line. The production line will be depreciated on a straight line basis over its useful life. So that is what you're given. We're also told that now amongst our required, a good examiner wanted us to determine, number one, we are supposed to calculate the annual loan repayment amount that will clear the loan in term. Create a loan amortization schedule, of course, breaking down each year repayment into interest, and the principal value as well. Calculate the annual depreciation charge and depreciation traction. Determine the project's internal rate of return. Analyze the net present value sensitivity to the following changes. That is the discount rate. If at all it increases, if at all in this case it increases to 12%, the year 3 cash flows decreases by 20%. So my good students, given such a question, ideally it is a combination of both various elements in financial management, and the beauty part is that Molimu guided us on the same. So as I've always told you, the most important item to always understand anytime you're dealing with business data analytics and any other paper, number one is usually presentation. Presentation is very key. Always make sure that anytime you're working it out, any question, presentation is the first thing that will capture the attention of the person who is marking your paper. So always make sure that your presentation is well. So like in this case, the best way will always be the questions. In this case, just come below. We are doing our solution. In this case, consider the first part. So we take this question. This is what you want to answer. We have it there, right? So the question, or a good examiner, of course, wanted us to determine to calculate the loan repayment amount that will clear the loan in term. So identify the items. We come and take our initial investment, cost of capital. You take all these items here. So we present them at this point. The details that a good examiner had given to us. So on this case, what is our loan amount? Our loan amount, there's a note that you're given here. This note will guide us. this note. So just come and have the note here just to guide us. Because you're using Excel, it will be much easier to just copy paste. We're told of the total investment, I'll take a loan of 50% will be financed using loan. So you're having a loan amount here. Come and take a loan amount, which will be 50% of 25 million. So 0.5 times 25 million. So that we agree that, right now, if I told you to talk of the loan that you're going to take, the loan will be 12.5. What about the annual interest rate? The annual interest rate, you're given a value of 10%. So you take 10%. We're given the other key element, which would be the number of years. So number of years, as per what the good examiner had given us here, we're given 5 years. So what are we supposed to compute? The annual loan repayment. So our annual loan repayment, which is basically the installment, this is our annual loan repayment, which is basically our installment value. At this point, how will we go about it? We will be required to apply what Mwalimu guided us, the PMT function. So what we're going to do here, we're going to apply our PMT function, payment function. Mwalimu guided us for this, so I won't repeat it again, but of course you're going to apply it here. So these are what you're saying. Our PMT, recall, equal sign, PMT tab, our rate. These are annual rate, which we're given 10%, comma. What about our number of period? Number of period, that is NPR, you're given 5 years, comma. The value of the loan that you're taking, negative 12.5. See? So in this case, we have determined what the good examiner wanted us to get on the first instance. Like we are asked of the loan repayment amount that will clear the loan in terms. So these are what you're having. The PMT function will be very ideal at this point. So once you're through that, we go to the other part. This other part, the good examiner is asking us to do what? To create a loan amortization schedule, breaking down each year's repayment into interest and principal components. Again, that would be easy, yeah? The aspect of loan amortization, where in this case, of course, we have years. So we start with year 0, year 1, year 2, all the way to year 5 as per what you're given here. So you go all the way up to year 5. That is what you're given, yeah? So considering that, what were we asked? We need to have the installment part, whatever that I'll be paying per year. These are annual installment. The aspect of interest, plus as well principal value. We have to also take into consideration the loan balance. See? So once we have these items, and this is what you're required to prepare. So how will you go about it? Our annual interest, already we have computed it, which is this value. So that is our annual interest that we have determined. See? That is the annual interest that we have computed as at that point, yeah? So once we have our annual installment, that is the case, that of course will begin from year 1. Interest component will be based on the loan balance, which our loan, this is the loan amount that you're taking, 12.5. Interest, you're given 10%. So interest is 10% of the loan balance, which you're having it at that point. Recall the concept of installment. For us to determine installment, we'll always be taking principal and interest. And now that we have interest, we can easily determine our principal. So how will we determine our principal? We take what you're paying minus the interest component. So that my principal value, these are what we should be having. And that will give us then our loan balance, which will be loan balance minus the principal value. See? So once we have that, the easiest way that I guided you earlier is that auto-filling, yeah? So under interest, that thick cross appearing, double click. We come here, we double click. We come here, we double click. And voila, that is our loan amortization schedule. Say some few steps. Loan amortization schedule as per what you were asked by our good examiner to prepare loan amortization schedule. So there we have our loan amortization schedule for the 5 years. See, you scoop all your marks. The other point, what were we asked? Calculate the annual depreciation charge and depreciation tax shield from depreciation. So part C, we come and take what you asked. You see, the presentation is very key. Your presentation matters a lot. Your presentation matters a lot. So once we have this case, we are asked of depreciation tax shield. How do we always compute our depreciation tax shield here? Depreciation tax shield, if at all Mwalimu can remind us, we said that in this context, we need to take our depreciation, we multiply by our tax rate. This will give us our depreciation tax shield. And what about our depreciation? Given that you're told we're using straight line, it is important to recall how to go about depreciation using straight line, where we normally consider cost minus residual value if there is any. In this case, you're going to divide by the estimated useful life. Say, estimated useful life. This will give us our depreciation component. This will give us our depreciation component. For those who are joining, remember this is a BDA August 2025 question number 22. That is what you are handling, business data analytics. So you realize that most of the concepts are what we did at our basic level. And that's why I've always insisted, anytime we are handling aspect of what you're doing at our basic level, I've always insisted it is always very important for us to make sure that what we did earlier on, it is a knowledge acquisition process, not just passing exams. You can now see how it is affecting us, of course, at this level. So looking at depreciation, how do you go about it? Already, we're given our cost component, where our cost, these are the details that you're given, cost plus the useful life. So easily, we can determine our depreciation then by taking our cost, which is 25 million, divide by the number, useful life, which we're given 5. So we agree that, you know what, we read about that, divide by, to give us our depreciation. And our task was to determine our depreciation tax shield. So therefore, my depreciation tax shield will take our depreciation times the tax rate, which our good examiner had given us a tax rate of 30%, not 2. So you take 30%. So once this has been obtained or determined, then you can easily come and agree that our depreciation tax shield is therefore 5 million times the tax rate, which will be having 1.5 as our depreciation tax shield. Yeah? So you're done with part C. Presentation matters a lot. Presentation is very key. The other part, what you asked? You asked to calculate the annual, that when you're done. Determine the project's internal rate of return, IRR. All that we are required to do here is to determine that rate that will equate our NPV to 0, kind of a break-even NPV. And in this case, we normally use the annual net after tax cash flows. See? Annual net after tax cash flows. I guided us on the same. So like in this context, let us see. These were just but our cash flows. So what we're going to do, of course, we take the data given here. We come and transpose it here. So these are the period given. We have the values given, but recall, we need to determine the annual net after tax cash flows. So the annual net after tax cash flows, given that these are our cash flows, we need to determine our corporation tax rate. So we have corporation tax rate or just tax component. Of course, tax component would be 30% of the value given there. And we are supposed to do what? To deduct this component here. So my tax rate or tax component is what we should be having. So this should give us the cash flows after tax. Cash flows after tax, we're having it at this point. We come and add depreciation tax shield. Depreciation tax shield. See, depreciation tax shield, we've seen it is 1.5. So because our values are in thousands, we take 1.5. So that eventually, when you have to talk about annual net after tax cash flows, we have annual net after tax cash flows. We should be talking about what? We have that plus what? Depreciation tax shield. And finally, this is what we should be having. See? This is what we should be having here. Very important to note. Very, very important to note. Annual net after tax cash flows. Very important to note. So that once we determine this, we can easily come, we copy, transpose. We have our cash flows that we have determined. Copy values. We copy and paste, transposing in this case. These are simply our cash flows here. Say, annual net after tax cash flows. Annual net after tax cash flows. So that is what you're supposed to have. And once this has been obtained, we add a column, or rather a row, and we have year 0. Year 0, we take our initial outlay, which was 25 million. We take our initial outlay, which was 25 million. Remember, Molimo had guided us about these concepts of IRR. So easily, we can agree and say that if at all you are to determine our internal rate of return, we are going to use what? Our IRR function. IRR function. So in this case, we do equal sign, IRR tab, our values including initial outlay, comma, the gaze value in this context. Initially, we had 9%, right? So we can take a value that is higher than the 9%, which in this case, you can take, say, like 10%. Enter. So that we agree that therefore our IRR in this context, we're talking about what? 42%. What we're required, of course, to do in that question. What about the other part? The other part of the question, this is what we asked. Analyze the net present value, NPV, sensitivity to the following changes. The discount rate increased to 12%, whereas the year 3 cash flows decreased by 20%. And this is what you're given. Again, we copy this question. We have it down here. See, our presentation is so that the person even who is marking your paper, you'll find that there's something to smile about, right? Because in this case, it's an impression that you've created that you know what you're doing. So we start with part A of the question here. Part A wants us to determine, of course, the discount rate, if at all our discount rate increases to 12%. What are we going to do? Of course, we take our cash flows here. These are the cash flows that you determined. Cash flows that you determined. NPV, our current rate was 9%. We compare. And we need to do a sensitivity analysis if our NPV is at the rate of 12%. What will we be having? Again, we use what? The NPV function here. Very important, very key. NPV function is what you're going to use. So this will tell us that we do have equal sign NPV tab. What is our rate? 9%, comma, our values excluding initial cost. We take our values, then we less our initial cost. So this will be our NPV at 9%. The same procedure will apply when you're looking at NPV at the rate of 12%. So you take that percentage, this is 12%, comma, our values highlighted. We close that, then less initial outlay. So this will be our NPV at these given rates. See, this will be our NPV at these rates. Scenario where our rate is 12%. Part 2. What are we required to do in part 2? Again, this is easy. The year 3 cash flows decrease by 20%. Which cash flow are we going to impact? Of course, we come and take what we had here. We come copy paste exactly what we had. So we have it at this point. What we are reflecting is that year 3 cash flows is decreasing by 20%. So ideally, we do about what? 80%, yeah, 0.8. So that eventually this will be our cash flows. And that is to say, all of this will be the same. Only that year 3 cash flow is the one that is changing. So what will be our NPV? I'll just take, of course, our NPV and have it here. So that I'll be having equal sign NPV tab. We're looking at 9%, comma, that is a NPV function. We're about NPV, yeah? Cosine NPV function. Where we about rate, which is 9%, comma, we take our values, then we less our initial outlay. So if at all there is a change in our cash flows for year 3, which is decreasing by 20%, this will be our NPV. See? So then already within few minutes, you have worked out all these questions. As Molimo was mentioned, presentation is literally very key. This is what will save you a lot. Presentation is very key. So this is the first part, or question number 22 of business data analytics. In this case, CPA, Kasneb, August 2025. So, guys, we have our classes for business data analytics. We have our classes for financial modeling and data analytics for CIFA, which is ongoing. Kindly, if you need the classes, you can always reach us out 07068 851. In this case, we have two modes, whereby number one, you can study at your own time by using our learning management system, app.mdarasa.com, where you can get access to the classes that we normally conduct, including the current semester and the previous recorded classes, which you can study at your own time, as well as you can also join our live virtual classes, which we normally conduct them during weekends. So these are what we have. Make sure that if at all you're doing business data analytics this time round, don't miss our revision classes. Don't miss our revision classes. To that point, guys, thank you so much. I wish to see you guys in our classes as we proceed. Bye-bye.